Investors and traders, welcome to the channel. Market chart pattern today is 22nd of May 2024. I hope everyone is having a great day. We will be taking a look at the key US markets. We will be taking a look at the US dollar and then the bond markets through the eyes of the US Treasury bonds, notes, and futures. And we'll have a look at the gold market, the silver market, and then we'll take a deeper dive into the US stock indices. As always, this video is for educational purposes only and is not a financial advice. We are taking a look at the daily chart of dollar, and dollar had been stronger today. And one of the reasons for the strength in the dollar could possibly be the FOMC minutes that came out today. In the minutes, what came out as a suggestion was that there was a concern with regards to lack of progress with regards to inflation. So it means that inflation wasn't coming down as fast as some of the participants within the committee had expected. So that led to some sort of a conclusion, perhaps within the market participants, that the Fed might not be as dovish. Now, this is interesting, but what we see from technical perspective is that the markets are actually moving kind of in what we had expected. We had a timing model. In the timing model, we were looking for some sort of pullback to come in the market because we entered into that timing zone. So have a look at yesterday's video and the weekend's video for the stock indices, and you'll know what I'm talking about. And here what we have seen is strength in the dollar coming up. So the dollar was strong by about 1/3 of a percent, and it's just moving towards this 20 period moving average, which could be resistance here. Now what we believe is that 107 level here is actually a pretty important top in the dollar, and we'll see how the price action will unfold. Now, if we take a look at the treasury yields, so this is the shorter term 2-year treasury note. The yields on the shorter end of the curve, meaning 2-year treasury note, were firm today, and the yields rose by about 0.87% right into the 20 period moving average. Our view is that we might actually be in this ABCD represented in the black line, which could in fact see the yields move as towards 3.9%, but of course it has to close below the 4.7%, which has been a support point as of yet. And it is something also interesting that we are just going to have a look at that on the shorter end. The yields were firm and rose a little bit today. But if we take a look at the longer end of the curve, so this is going to be the daily chart of the long bond futures. It's the 30-year duration bond futures chart. What we see is this is on the right, on the y-axis, we see the prices. The price actually rose, so meaning the yields actually fell for the day, and the price rose by, yeah, not by a lot. It was kind of flat, 0.05%, but it is interesting to see the yields actually notch down a little bit. So this is the longer end of the curve. So what we see is, if we just compare the 2-year treasury note, shorter end, and the longer end of the curve, we see a little bit of an inversion. Shorter end, the yields were rising today, and here on the longer end, the yields were flat to slightly lower. Now that's a little bit of an inversion. Maybe it's just gonna be a few days phenomena, and then maybe the yields on the yields will kind of find a direction on the shorter end of the curve as well. On the longer end, we are just waiting for certain technical levels to be broken out, hopefully to the upside, where we could then confirm that we might actually be in a CD leg higher, where we can see prices much higher and yields much lower on the longer end of the curve. Now taking a look at TLT, which is the 20 plus year duration treasury bond ETF. We have a similar kind of a pattern formation to the 30-year treasury note, but we are really carefully watching for the 90 to 40 to be broken, hopefully to the upside. That would take a lot of overhead resistance out, bearish symmetry being broken, and then we could see prices rise higher and yields lower. But we can also see that today was a positive day, and in fact This was up by 0.12%. That is 20 plus year duration treasury bond in this ETF. Gold, let's move to the gold daily chart of gold. Gold was really interesting, and we have the dollar stronger today and gold move lower. Now there is a interesting very interesting point where the gold actually is at the moment. Let me actually draw it for you. I'm just removing some of this so that it's a little bit clear to see. Here we go. So if we just take a look at from here to here, oh wow, not too many ratios around here. So the gold was actually right to the 38.2% retracement from these lows of 2285 to where it closed pretty much today. So that kind of 38.2% retracement is pretty normal, but it's been a pretty significant pullback. Now we have the 20 period moving average a little bit lower around 23.53.
The markets are open.
It is possible that the market could in fact also pull back around to this level. So that will be interesting development. Excuse me. So this is what we are watching in gold. Gold is the price action doesn't have a very clear pattern formation at the moment, but the trend has been strong historically since February of 2024. So yeah, we're just watching for certain key support levels to be held for this market to move higher. And if we take a look at excuse me, the silver market, it's pulling back after hitting that 1.618 extension level. And if we just draw a retracement, it hasn't made its 38.2% retracement, but it could pull back a little bit further. Then we'll also have support from a structure around the 2990 level as well. Okay, and now what we're going to do is we are going to move into the stock indices. We'll take a look at the European indices first. Daily chart of the German DAX index, and it's also been a day in Europe, which was essentially trading range, but closed negative, but still holding this key level of 18,630. The price remains above the 20-day period moving average. And if we take a look at the UK FTSE 100, it also pulled back. In fact, it closed below this key level that we were watching yesterday around 8379. It could pull back a little bit further to the 220 period moving average. UK had its inflation data come out, which was a little bit harder than expected. So we are seeing some sort of a pullback, perhaps based on that reaction. Now the key thing is that the UK market has had a pretty good run, but still a possibility maybe it could reach as high as 85.65, which will be the 1.618% expansion of this entire swing from here to pretty much from this high to this low. Okay, now we'll move on to the US markets, taking a look at the S&P 500 cash index. So again, narrow range trading day again, and the markets have been having a fair amount of volatility, but narrow range of days if we just compare to a day like this one or here. And you can see that the market actually closed a negative for the day on the cash index, but the chances are it's actually still moving towards the 1.272 expansion. And if we take a look at the ES futures chart, it's going to be really interesting here that it was also a negative day in terms of futures. The cash is a little bit stronger than the futures, but the chances are so actually also moving towards the 1.272 expansion. In fact, the futures closed lower by about quarter of a percentage point. Now we'll just move on quickly to the NQs. So the NQs are really interesting because the Nvidia earnings came out, and there has been a fair amount of activity after the close. So this index was up pretty much flat, actually just up by 0.09%. But it also appears to be moving towards the 1.272 expansion. And if we just take a look at the NASDAQ 100 cash index, yeah, it's very, very close to the 1.272 expansion. And then we'll take a look at the Dow Jones Industrial through the eyes of the futures. So Dow Jones is painting a little bit of a different picture, because you can see that this market actually closed lower by a fair amount in terms of the way the candle looks. But still, it unlike the Nasdaq and the um, ES S&P 500 mini futures, it hasn't taken out these highs of April, so this is something to be noted. But on the cash basis, it has. So that's an interesting development. What we see in cash and what we see in futures is a little bit different. The cash seems to be stronger, and a lot of those are actually getting really close to their 1.272 expansions. Now we'll take a look at the Russell 2000. This is the yeah, there we go. This is the daily chart for the Russell 2000 futures. We were watching for this um, wicked wedge formation yesterday, this triangle formation. Price closed below that, but still above 20 period moving average. And as I raised the concern that it keeps on closing below its 78.6% retracement, and it's just not taking out, or it's not very clear, very close to, excuse me, to the 1st of April highs. And if we just take a look at this on its ETF, the ETF, you can see the cash has actually, although it also closed lower by minus 0.84%, it has had closes above the 78.6% retracement before. So this kind of how the cash is performing and how the futures are performing for different indices, it's very interesting. But again, we are in a window from a time perspective where we were expecting some sort of a pullback to come in. So 2-3 days pullback could be just normal. Now the interesting part is that with Nvidia's earnings coming out, it'll be really interesting how the price action will be for tomorrow, and I will update you guys again tomorrow within video update. So thank you very much for watching the video. If you like the video, give it a thumbs up. If you like our analysis, please do subscribe to the channel. Good luck, good trading, and speak to you guys soon.